Well, good morning, John. It's good to see you. We're recording this on Friday morning. John, obviously the news of the week was the Reserve Bank of Australia lifting interest rates for the first time in a couple of years from 3.6 to 3.85. Now, the market, I think, was anticipating that, but I'd like to hear your thoughts, and particularly on the justifications that the Reserve Bank governor has given. John, what did you think about the RBA lifting rates this Tuesday?
Well, it was always possible, and I guess the market said it was probable. But the big issue was the backgrounding of the press and the community through the Q&A session, the press conference, and that was decidedly disappointing. And I think investors listening to that would be disappointed. We're seeing already, not saying it's caused the Australian share market to pull back, but certainly the Aussie dollar's got some issues now again. What I picked up on is that the lack of criticism of fiscal policy in this country by the governor. We do know that the governor's appointed by the parliament or by the government and by the treasurer, and so is there a subservient relationship? I don't know, but she was very, very reticent to criticise the government expenditure. Now, I'm of the view it's not so much the level of expenditure at 27% of GDP that's the issue. It's how it's spent. And if it's not being spent for productive purposes, for better services, for lowering the cost of living, for improving the standard of living, then it's wasted money. And I think the big issue about Australia's budget is there's probably at least 2% of GDP, that's the difference, $50 billion, is probably being wasted. And it would have been good if the Reserve Bank chief said, look, we can resolve these issues and we can start having monetary policy and fiscal policy working in harmony, but this is what the government needs to do. She flatlined, refused to tell the people what the government's doing wrong. And then she says, well, look, fiscal policy is not my problem. Well, I think it is. If you're managing the monetary policy of Australia and the cost of debt in Australia, and therefore the cost of the yield on bonds of Australia's debt in the world market, it is your problem because that debt is issued to fund fiscal policy. So her statements were bizarre and actually very, very disturbing. And I think it's put Australia on the back foot because what we've been saying, you and I, Paul, for months is it's unclear what our strategy is. And I think she defined there is no strategy in this country. It's really, let's put up interest rates and see what happens, but we'll do it in a vacuum without any concern about a total economic policy setting.
Yeah, it is very disturbing, as you say, John. We've got sticky inflation, as they say, well outside the 2 to 3% band. And it's not clear whether this increase in rates was a one and done or just the start of a new cycle. Everywhere else in the developed world, they're lowering interest rates, apart from Japan. But we're really out of sync with the rest of the world. And it comes back to productivity or lack thereof in Australia. So much money is being wasted.
That's the point.
Is it the fault of the federal government or the state governments?
Well, all of them. Both? All of them. I mean, you're right on the money. I mean, the government sector is spending more money. As I said, that's not so much the issue if it was productively being spent. If it was fighting inflation, if it was improving labour productivity. But the government sectors of Australia just keep on spending money willy-nilly. They respond to political needs, i.e. how do we get votes? How much can we spend to get a vote? Where can we spend it to get the maximum votes? Without any concern for running the economy as if it was a business, And then we've got the financing of it, the Reserve Bank, effectively, who's the banker, saying, well, you do what you want, that's your decision, and we'll do what we want, and we'll see if we come to some conclusion in the future. That's essentially what we saw this week, And it's about time we as Trump is doing in America, should the Central Bank of Australia be independent of the government? Well, if that's going to be the case, well, then the government can't elect the Reserve Bank board or the chairman or the governor. So it breaks down at the first point, I actually think monetary policy and fiscal policy should be managed in unison. The governor should be able and should be willing to say, when she thinks the government is doing the wrong thing, when they're not running the economy properly, which in effect causes her to adjust interest rates because of that action or inaction by government. So they are connected. And then your point about inflation, you know, there are two issues about inflation in Australia. One is the productivity issue. So we're getting less, you know, we're not working much harder and we're getting less output and it's costing us more per capita. And then it's the electricity cost, the cost of doing business, you know, and the rest of the world who are producers or exporters of energy have managed their economies to minimise the effects of energy costs. Australia's done the absolute opposite. And it's well beyond time that, you know, if we are truly have independent thought in this country, that the Parliament, you know, which is caught by dogma of left and right, you know, Liberal and Labor, they're just dogmatic. They just don't come together and talk about what's best for the country. How can we use our natural resources? And it's coming against us big time, you know. And we got a free kick this week with the Aussie dollar, with the interest rates. But now, you know, we can see today, and let's see what happens next few weeks, the Aussie dollar's weakened again. Now, that may have something to do with a strengthening US dollar because of the disaster going on in Bitcoin. So there's a flight back out of risk assets back into US dollars. That might be one of the reasons. But the fact of the matter, if you look at Australia from afar and want to invest here, we don't present a very good investment case.
Yeah. And apart from facing very high electricity costs, the government isn't being held to account by a competent opposition. So the coalition's imploded. One Nation's survey results or popularity odds have gone up tremendously, and the government doesn't face any serious constraint on its lack of leadership.
Well, the polls, if they mean anything, suggest that you don't have to be a politician to be the preferred Prime Minister in this country. That's what I get out of it. Now, it's a three horse race, you know, and Pauline's the third one, Pauline Hanson. But does anyone seriously think she's the best Prime Minister for Australia? She's the best of a shocking lot. That's all that's saying. And if you look at the numbers, 47% of people seem to suggest we don't need a Prime Minister, or the best Prime Minister is not on the list. And I think that's what's coming right across the Western world, that there is a growing view and a generational view that politicians actually don't do the job that we vote them in for. They don't have a vision, you know. And I think the protest vote, which is essentially what Hanson is getting, is a protest against both parties. The opposition's hopeless and the government can't even manage the economy. And we've got a reserve bank who doesn't want to contest the management of the economy. So you end up with a schmozzle, and that's what we've got. Now, I keep on saying this, that people who couldn't vote 10 years ago because they're too young are coming massively into the voting system, and the protest vote's going to be extreme. And at this stage, there's only one way you can protest: vote for One Nation. That's how hideous it is. So I think we've just got to, you know, come to grips with this problem very quickly. The next election's 2 years away, but crikey, you'd like to see some change here.
The other thing that happened internationally was Trump nominated Kevin Walsh as his next Fed chairman. It obviously has to be approved by Congress, but immediate response was a sell-off in the precious metals and Bitcoin. So gold, which had run up to record levels above 5,000, is now on the skids. So is silver. Bitcoin, as you said, has collapsed. What's changed that created this market volatility?
Well, the nominated Federal Reserve Chief has a history of saying he's not a quantitative easing supporter. And the markets were running, and we were suggesting that that's going to be a primary part of the monetary policy of America to support their out-of-control fiscal policy going forward. And the next Federal Reserve Chief, President, was going to be a proponent of quantitative easing. Now, he's got a history of saying, yes, he did support QE in COVID, and he supported QE after GFC. But what he said in those intervening years, QE was used too aggressively and went on for too long. So people are reading into that he's not a QE proponent. I'm not so sure. And I'm not also absolutely certain that he's not going to be independent of Donald Trump. I think anyone who believes that is in fantasy. So I think we will see him saying the right thing to get supported through the parliament. And then you'll see the pivot where he does what he's told. You know, that might be an outrageous statement, but I think that's where we're headed. So I do think the markets will regroup at some point. But we were overdue for pullbacks, honestly. You know, you had Bitcoin doubling and now halving, and gold is going through a correction. Silver got out of control. The fact of the matter is the world continues to grow. You know, China and India, there's been a trade deal between India and America this week. So that's pro-growth. Australia needs to get on and start doing trade deals as well in the Asian region. There's no problem with growth. The problem is the level of debt in the American government sector. It's huge.
John,
and if you listen to the Fed guy is saying, well, we have to reduce it. Well, come in, spinner. How are you going to do that one?
The other big development has been the sell-off in the tech sector. I mean, it's not just tech stocks in Australia. This is global. There's a move away from the so-called Magnificent Seven, which started underperforming probably 4 or 5 months ago. And the leadership of the share market in the US has completely swung around. I mean, all the AI companies and the technology leaders are kind of on the skids, including Nvidia, Amazon, Meta, Alphabet, and leadership has gone to other more traditional sectors, the industrials. Is that the bubble deflating? Is that a positive sign? Is that good for the market, or should we be nervous about where AI is taking us? Yeah.
It's taken a long time for the market to reflect on reality. Apart from the valuation issue, where we had extreme valuations, it's, well, what does this technology mean going forward? We're seeing software companies in America getting substantially downgraded. You know, software companies which had basic, say, legal documentation services are now being completely wiped by the fact is, well, AI will replace that software, you know. So the upside and downside of AI is now we're into the interesting period where a lot of money is being spent, a lot of valuations are being created, and the reflection point we're going through is, well, who are the winners and losers? And this sort of happened after 2000 when the bubble blew. It wasn't the end of the internet, 2000. It was the emergence of strong companies which traded off the internet. I suspect the same thing will happen with AI. There will be winners, but there's no doubt that we've got a problem on the employment sector. And that's where education is going to be very, very important, you know, to educate people into the new world. Otherwise, we're going to get a situation where people, you know, human race sort of drifts towards mediocrity. That's what we do on an average. And we reward mediocrity. You know, the whole system has rewarded mediocrity where people who, in my day, wouldn't have passed the HSC now come through with distinctions. I mean, it's wrong and it's not going to work. But on the interesting side of it, is AI going to create a huge deflation? Is it going to drive down inflation at the cost of doing business because labour drops out of the cost chain? I mean, there are big issues here. So I know we opened by talking about inflation. Arguably, AI is going to be a real stop on inflation going forward if you think about it. But it's also going to upset, we were talking in our morning meeting yesterday about, well, what happens to Australian companies which outsource menial jobs to Asia? You can see a lot of those menial jobs being destroyed by AI. So the outsourcing will change again from Australian companies not being able to run menial jobs, they outsource to Asia, then all of a sudden they can bring back the menial jobs because they're not done by a human. So there's serious things to contemplate here. And it's not a time to be bullish and it's not a time to run away. It's a time to reflect. And, you know, that's what we're trying to do with these videos and the way we manage money.
Yeah. So, John, within the ASX, we don't really have to do with too many technology companies. It's not a big sector on the ASX. On the other hand, materials and financial stocks are big sectors. So we've seen gold and silver sell off. The industrial metals, not so much. So copper's still quite strong. Iron ore still above 100. Global growth outlook, not too bad. I see that Rio and Glencore have abandoned their talks. Do you think that the commodity cycle is still a place to invest in? And how does the interest rates affect the banks?
Well, look, the resources sector has a lot more sound tailwinds for it in terms of world economic growth, the continual emergence of India and China as large economies, and people should reflect on the per capita GDP of those economies. I think India is something like a 20th of America, and China is still about 25% of America in terms of per capita GDP. They have a long way to go, to match the Western world. So it's not going to stop anytime soon. So that's good for resources. Those economies will continue to demand the resources, and particularly those which Australia has. So there's a fundamental basis of it. You just don't want to pay too much for that opportunity. That's the problem with markets, is that we've got too much liquidity, and rather than fundamental investing where people are happy to get 6, 7, 8% compound returns over 10 years, everyone's chasing this 20 to 30% return one-off and hoping they can get out of that market before it drops to nothing, and that's the best example is Bitcoin. And the latecomers to gold, the latecomers to silver, all this mad speculation. And you've got people making money. When they do make money, they can't explain why. When they lose it, they blame everyone else. We're going for that sort of world. So the fundamentals, I think, are good for resources if we understand what the fundamentals are in terms of pricing the stock. In terms of the banks, we're in an interest rate increase cycle in Australia. How long it'll go on for, time will tell. But the initial benefit is there in terms of margins, interest margins, that they immediately put up their mortgage rates. So they're grabbing margin. It'll be whittled away in coming months, as it always is. But I go back to the previous question about AI. Is AI a long-term benefit to the banking system? Like they've been trying to jettison jobs for years. Maybe AI is the next big thing where banks substantially cut their employee numbers and their cost of doing business. So you scan across it, big companies like that may be winners.
Yeah. Well, John, I think we'll probably have to leave it there. We've gone over time, and as usual, there's a lot of moving parts. But the outlook for 2026, I guess, if I'm hearing you correctly, is it's back to basics. Get some decent yield. Look for quality companies, reasonably priced, with protective moats around their business models. Those are the messages that you're giving to clients?
Well, crikey, if inflation's 3 to 4%, and arguably, the aged part of the Australian community is not having that sort of inflation unless they're going into aged care, 7-8% returns are fine. That maintains their capital, it beats inflation, and they're going to have a reasonable life, getting a return on their capital. I think the chasing of market returns and this aggressive speculation is in the lower age cohorts who are looking up a very steep mountain created by, very lax monetary policy for 20 years, excessive fiscal policy, massive giveaways, a ridiculous taxation system. We didn't mention about the capital gains issue, which is now, but we'll talk about that next week because the government's putting it out there. We've got two sides to this market. People with capital don't need to be aggressive. People who don't have capital probably are over-speculating.
Yeah, it's like a 30-year-old couple, and they say to themselves, well, we've got 20 or 30 grand. We can't ever afford to buy a house or a unit, so I may as well speculate on Bitcoin and see if I can double it up. But very dangerous approach. Yeah.
Exactly.
All right, okay, John, we'll leave it there. Thank you so much, and we'll see you next week.
See you.